Maharashtra-based country liquor manufacturer GM Breweries Q2 performance was on expected lines. The top-line growth was driven by sustained demand momentum across its key end markets. The earnings outlook seems to be improving as recent correction in global commodities along with the arrival of the new sugarcane crop should pave the way for margin recovery in the coming quarters. Sustained momentum in economic activity across the Mumbai metro region, especially rural markets, drove the demand for country liquor in the quarter gone by. Headline sales growth appears to have been driven by a powerful combination of both higher realizations as well as better volumes. The demand for country liquor remains very solid as GM Breweries posted a top line in the excess of 140 crores for a third consecutive quarter. GM Breweries' gross margins have been under pressure for quite some time owing to elevated crude oil and agri-commodity prices and adverse currency movements. Operating margins had plunged to multi-quarter lows of 15 to 16% in the March and June quarters. However, margins in Q2 came in the excess of 20% as softening of raw material input costs as well as implementation of price hikes suppressed the cost base in the quarter gone by. Maharashtra has emerged the single largest sugar producer in the world with a production of 137.4 lakh metric tons in 2021-22. Now, based on the current estimates, Maharashtra is expected to produce 138 lakh metric tons of sugar in the upcoming crushing season of 22-23. Therefore, the prices of molasses, which is the key raw material for GM Breweries, is likely to soften a bit from current levels in the next 3 to 6 months. Meanwhile, the prices of crude oil and other commodities have also undergone a significant price correction, anywhere between 20 and 30% in recent months due to the global macro environment. The trend in GM Breweries' raw material cost basket indicates that a bottom in operating margins has most likely been attained. Going forward, we expect EBITDA margins to improve by 200 to 300 basis points over the next 3-4 quarters. GM Breweries' business continues to show excellent progress across multiple dimensions. Q2 results indicate that the demand for country liquor remains very strong despite the widespread concerns of a rural slowdown and potential recession. The company has been able to deliver solid earnings by expanding its distribution network. Cheerful consumer sentiment in the ongoing festive season and upcoming winter season should continue to drive uptick in volumes in the second half of this fiscal. The company is operating at a capacity utilization of 45–50% and has sufficient capacity headroom to grow the business volumes without incurring capital expenditure. At the current market price, the stock appears attractively valued at trailing 12 months price to earnings multiple of around 11x. Considering the overall industry backdrop, profitability should get a boost from cyclical improvement in margins. We therefore recommend long-term investors to accumulate the stock on dips as the company is a consistent cash generator with strong business fundamentals.